Now, staying with the Federal Reserve, the central bank's policy-setting group wraps up its two-day meeting today. No one is expecting the Fed to raise interest rates from the current record lows, and Bloomberg's Sara Eisen is looking into why that is. So the range of 0 to 25 basis points stays.
Conventional wisdom is the Fed isn't going to budge on borrowing rates because the economy is still weak. That's just part of the story. Here's the other main reason. Banks aren't lending. In fact, they're lending less and less. Here's your proof. It's actually put out by the Fed itself, and it is a measure of commercial bank lending. Reached a peak during the credit crisis, then it plummeted, and it's still falling, Scarlett, despite TARP, TALF, and other countless programs that injected billions into the banking system aimed at unclogging credit. So why is that? Michael Pond at Barclays says it's jitters about the economic outlook, plus banks are still concerned about bad loans. Why would they issue more loans when some of the loans they're already taking out are still going bad? Pond puts us into the slack category, where slack in the economy means easy monetary policy is here to stay. Pond says we don't want to get up to the danger zone leading up to the credit crisis, but we do need to see bank lending moving in the right direction, and that is moving higher, which is not happening, which means you can pretty much count on easy policy, very low interest rates, high liquidity here for a while.
So what can the Fed do to bring this chart back up again?
Policy-wise, not too much. You know, this isn't China. The Fed can't order the banks to lend, but it's not all bad news. Some of what the Fed has been doing has been working in that we've seen GDP starting to go positive. Inventories are not contracting anymore. Consumer spending no longer negative. These are all steps in the right direction. And the idea here is that when consumer spending picks up, consumers will want to start borrowing more, businesses will want to invest, and that should create more demand for the loans. So it is starting to turn. We could lead to some credit growth here. But there's your color. There's your reason of why we aren't seeing much action going on right now in these Fed meetings.
And of course, we'll look for some commentary along these lines from the Fed this afternoon at around 2:15 p.m.